In this video we're going to talk about measuring performance in operations. Now we're going to see how difficult this is and sometimes why it's impossible to measure. But it's important that we go through the various stages of measurement and look at different functions within the organization to assess their suitability for measurement. What are the advantages of measurement and what are the downsides of measurement? And in the cases where we can't measure it, at least we recognize that it should be monitored. It should be monitored closely. We'll see how this works out as we work our way through this particular video. So managers determine how organizations provide value for the customers. It falls to management to decide how customer requirements are met. So that's important. And managers clearly are the motivating force and the enabling force for production to take place, and also that the customers get products that they want. But managers need to know how effective their decisions are. They need to have feedback on how well they've done. If they don't have feedback, then they may become complacent or may start making bad decisions. They don't know what's good and what's bad unless they have feedback and they have some sort of response to their performance in the past. So it needs measurement, it needs analysis. They do this by attempting to measure performance and compare it against some benchmarks. So it's important to make measurements if possible, and we'll see there are many areas in where measurements can't be made, or measurements can't be made properly or accurately because of the nature of the situation. However, if measurements can be made, then they can be compared with some benchmarks, some calculated optimal levels of output or optimal levels of performance. Then any shortfall can be indicated to management, or any issues can be indicated to management, so they can learn from what they did and try to make improvements, or they can try to rationalize what happened or understand the situation. So it's important that managers get feedback on their decisions. That's how the business progresses. That's how the business improves. So good decisions are facilitated through good measurement. Good decisions, good measurement. When measurements can be taken and compared against benchmarks, against set standards, and that's fed back to the management, and the management can do something about it, can deal with the decisions, can deal with what went wrong or why the outcome was not favorable, or the management can learn from the situation. So it's important that good decisions are recognized to come through good measurement. In general, quantitative measurements are used as these are seen as most reliable. Quantitative measurements are not that subjective. But again, as we'll see, the output of many companies is difficult to assess in terms of, let's say, quality. Quality tends to be assessed subjectively by the customer. Was it good value for money? It's difficult to be objective about such a thing. So sometimes the information that is fed back to managers is based on subjective measures. And then there's a question mark: how reliable are the feedbacks? How reliable is the data coming back from surveys and attitudinal surveys and so on? Or is it the case that any information coming back is good compared to having no information? Or could it be that some information or some data coming back is dangerous? It could lead to faulty decisions. Key questions relating to measurement in operations include: how should the performance of goods and services be measured? Well, it varies from company to company. but how should performance be measured? Should it be measured in terms of outputs or quality? Is there a trade-off between output and quality? Perhaps the more output you've got, the less the quality. Better quality, lower output. Is it possible to have more output and more quality? It's difficult to assess performance and measures in many companies. It's the effort to assess the performance and measures in companies may sap so much time and energy that it's simply not worth doing. It might be better to let the production run and to make sure that the product that comes off at the end is the one that was designed to come off at the end, in terms of dimensions, in terms of functionality, in terms of design, rather than trying to intervene at every stage of production, trying to measure and count and weigh, and maybe the effort to do that is not appropriate. Very difficult area. How should we measure performance of processes throughout the value chain? Well, every part of the value chain is important. The business is not engaging in activities that are irrelevant, I presume, and you would be right to presume the same thing. Businesses are there to perform core activities, to make the product. And if they're making the product, that is the value chain, right from the time the raw materials arrive in to the time the final product is made. So all of them are core activities. All of them are part of the value chain. So if one of them is missing, there won't be a product. So in that sense, every part of the value chain is valuable. It's the value chain. So how should we measure the performance of processes throughout it? Well, perhaps some parts of the value chain are not working to optimal capacity. The throughput is not the same as the other parts. Perhaps there are bottlenecks in the value chain. That may be an indicator. Perhaps some machines are not running optimally. Perhaps the tooling on some machines need looking at, or perhaps some of the operators need further training to ensure that they're running up to speed. So it may be possible to look at parts of the value chain for some issues such as those. But insofar as there is a value chain, all parts of the value chain are important. How should we measure the overall organizational performance, and how does it relate to internal operations? Well, on the one hand, we have the production system. Let's say in a manufacturing business, we have the production system, and it's perhaps all too easy to focus on the efficiency of the production system. But what's the efficiency of the HR section? How do we measure that? How do we measure the productivity of the marketing section or marketing departments, HR department, marketing department? How do we measure their productivity? How do we measure the productivity of research and development? They may work for months and months and produce nothing. They're still experimenting with some new idea, some new product, but they haven't produced anything. So what's their productivity? What's the productivity of the finance section? How difficult is that to measure? So there are major issues in terms of performance measurements and performance indicators that need to be looked at. And I've just posed questions here. I haven't given real answers. But they should be borne in mind, and the nature of the question should be understood. The scope of performance measurements. Well, good performance measures enable managers to control processes and make decisions on the basis of fact, not opinions. So good performance measures enable managers to make better decisions, and they're based on facts. This is what happened. If we do that and that, then this will happen. So the managers know, on the basis of experience, on the basis of history, on the basis of reasoning, that if certain things happen, certain processes and certain outcomes will follow. So it's not their opinions. It's moving from their opinions to their expertise in understanding the facts and their ability to analyze the situations and compare them to perhaps what happened in the past. Selecting the right measures, not too many and not too few, is very important. Is a very important decision that all managers must make. When we are trying to measure, say, a performance, which measures should we take? It's again easy to get roped into the idea that measurement of performance is very important because it helps decision making, but then we start to spend a lot of time making measurements, time that should be used to produce products. That's what the business is in business for, to make products, to sell the products to the customers. It's not in business to make measurements. It's in business to make products. So getting the balance right, what's the right amount of measurement of performance versus making the product, contributing towards the productive process. That balance must be correct. We're going to have a look at a list of various categories of performance measurements, and you'll see from the list when we put it on the screen in a few moments that measuring performance under these various categories, under these various headings, is extremely difficult. Now, it shouldn't put us off attempting to measure, but the complexity of the measurements and the time taken to measure must lead to a questioning of whether the particular processes are worthwhile or not. Maybe instead of having measures, some routine investigations and routine inspections with a lot of common sense applied would be better in terms of efficiency than trying to get hard and fast measurement tools. But some of them, because they are essentially subjective, are not really that suitable for measurement. But nonetheless, there are categories that are important to the organization, and in that sense we should include them in the list, but it doesn't mean that they can be measured effectively. Let's look at the list. Now, these are performance measurement categories. These are areas that in a sense should be looked at or could be looked at in terms of measurement, but we'll find are very difficult to measure, and therefore maybe it's the case that, as I said, regular inspections, feedback from operators on the shop floor, line management, departmental heads, regular meetings of the business to discuss issues might be a better way of gauging the measurement issues than trying to get hard and fast answers in a very objective and logical fashion. So the objective and logical may be too expensive, if not impossible. But nonetheless, here's the list. So the measurements of the financial. Well, financial tends to be based on information, so the performance of the business can be assessed. The performance of the financial section may be more problematical. But the performance of the business in terms of the facts and figures and the accounts receivable, the bills paid, management of cash flow, break even, statutory accounts, payment of tax, payment salaries, payment to customers and so on, these can be assessed and say yes, they were on time and they met the requirements. So that's a measurement of efficiency. But is the financial section overstaffed? Or is it understaffed? Or is it using the appropriate technology? That's a more problematic question to answer. Customer relations management, how is that measured? Are customers genuinely satisfied, or the fact that the customers had to contact the business because the product was seen as faulty or not good quality means the customers will always be missatisfied or dissatisfied. The customers will always feel a sense of grievance towards that product and towards the company because they had to go through the trouble of contacting the company. So, safety. Safety is very important in business. People go to work for salaries and incomes and wages. They don't go to work to be hurt or to be killed. So it's important that the working environment is safe. And perhaps having inspections by outside agencies would be the best way of measuring the performance of this category. And having reports conducted on safety, maybe that's the best route. Quality of the product. If it meets the specifications and it meets the design requirements and so on, you could say it's good quality. It could meet its durability criteria, that it lasts for so many years. That could be an indication of quality as well. But quality is sometimes assessed in the mind of the customer. It could be related to branding, the image and reputation of the business, or it could be related to what the competition is like. So sometimes quality can have a subjective component which makes it difficult to measure. Time is an issue as well. It's an important resource for the business. It's buying the time of the people working in the business, so the time must be used effectively. But how is that particular measurement implemented? How is it looked at? And bearing in mind that people are people. People are not machines. They sometimes work fast and efficiently, and sometimes they're more sluggish. We all go through different patterns of activity throughout the day. Sometimes we're active and sometimes we slow down a bit, and sometimes we're ill and sometimes we're healthy. And so how is time properly measured, or can it be measured? And flexibility, how can flexibility be measured? The ideal organization is it can be flexible. If for example, in the case of a production system, if one machine breaks down, can the work be rerouted through another machine? Is it flexible enough? How do we measure the advantages of that flexibility? Well, we can't measure it as such, but maybe we're aware of it, or we can have reports to say that in the event of a breakdown, reroute the work in this particular way. Or innovation and learning. It may be we have a research and development department, but as I said earlier, they may be working for ages trying to develop something and haven't produced it. So how do we measure their productivity? But when they come up with an idea, perhaps it's a very good one. Learning. How do we measure the effectiveness of learning programs and training sessions? Sometimes it may be reflected in productivity, in greater skills of the workers and greater application to jobs and motivation. Sometimes it just simply can't be measured. It's an activity that the companies go through, knowing full well that they can't gauge precisely what the effects of the training programs are. Can't measure it. Productivity seems like one that can be measured. It's output divided by inputs. But if the company is making several products, then how do we work out which inputs? And if it's using a whole variety of techniques, some of which are outsourced, then how do we measure productivity? And is it the productivity of the machines we're measuring, or the productivity of the people? People may work with machines. That's the unit. The unit is one machine per person, let's say. Well, if more output is produced in a day, is that because the person has worked harder or the machine has worked harder? It depends on the nature of the machine. But some machines maybe have automated processes. Some machines may be computer controlled, in which case the person operating the machine presses a button perhaps and the machine does the rest. So is productivity then the productivity of the machine, not the worker? It's difficult to sort out. The stores, well, which items in the stores can be measured? The storekeeper, the person who is responsible for the stores, the productivity of that person in terms of satisfying the demands for raw materials and semi-finished goods, or is it the fact that that person is simply efficiently holding the stocks that has been given to him or her by the previous levels of production, by previous production runs, and therefore it's not their fault what they're holding in stock. It's simply what they were given from previous batch runs in production. Measuring the productivity of the stores is also problematic. The resources given to the people working in the stores to have an efficient system. If there are many items held in the stores, how did they retrieve it? How did they catalogue it, and where did they keep it? The delivery and logistics. It sounds like it's simply a question of measuring the time the product enters the distribution department to the time the customer receives it. That's a measure of productivity. That sounds straightforward, except the person receiving it could live on a different continent, could live the other side of the world. That's more problematic. So some of the customers might live next door, in which case productivity would seem very high. It just comes off dispatch and goes next door, just goes down the road. Or could come off dispatch and go to the other side of the world. So delivery times are not very accurate as measurements of performance. So there are issues in terms of how we measure the efficiency and performance of those areas. And finally, maintenance. There could be routine maintenance, which is monitored. Do the routine maintenance personnel go through all the machines in a particular cycle? Are they allocated 1 month to deal with all the machines in the business, let's say? Oil the machines and clean the machines and monitor the machines and so on, to prevent breakdown. But even then, despite their best efforts, machines may still break down. So it's unfair to blame them for a breakdown. If they've managed to complete all the tasks asked of them in that cycle and the machines still break down, it may be due to something else, something which wasn't on their list. You can see from the list we've got here, this is a complicated area. Performance measurement is not straightforward. And maybe it's the case, just as a suggestion, maybe it's the case that what the company should do is let the product run to the final stage and make sure that it meets quality, or it meets quality at each stage as well, perhaps, in terms of dimensions, functionality, design. So it can be measured throughout, and when it gets to the final stage, then it should be in a state that is ready for purchase by the customer, which will meet the order of the customer, and then go to dispatch. So maybe that's the way in which performance should be measured, and everything else is either a luxury or it's important, but the company should not spend too much time on attempting to measure its effectiveness. Just suggestions, maybe misplaced suggestions, but suggestions nonetheless. Financial measures. Well, these often take top priority for profit organizations. So for profit organizations, making sure that they can pay the bills, receive revenue from the customers, manage their working capital, the cash in the bank, and pay salaries and meet the overheads and so on. These are top priorities. If they can't do this, the business does not exist. The business will fail. So it's essential that the financial measures are appropriately worked out and that the finance staff have the competency to ensure the smooth running financially of the business, and that statutory obligations, tax and so on, these are all met and dealt with. Traditional financial measures include issues like revenue, return on investment, operating profit, pre-tax profit margin, asset utilization, growth, earnings per share, and various other liquidity measures. So data can come back from the financial section of the business on all of these, and it'll help to pinpoint areas of concern, areas of success, and areas where the business is doing well. And they can also be used to benchmark how the company is doing compared to other companies perhaps in the same sector. For example, earnings per share. Well, what's the dividend payout in companies that are similar to the one we're considering? So the company can benchmark itself in terms of performance, financial performance, against some other companies. Non-profit organizations focus more on minimizing costs and maximizing value to their target market, customers, and to society. So non-profit organizations, or not-for-profit as the Americans say, not-for-profit organizations, these may be interested in the growth of their customer base. Are they supplying more service to more people? Are they widening the type of services they're providing? And are they minimizing costs? Are they doing this most efficiently? And thereby maximizing what they can get out of very limited budgets. Budgets perhaps which have been donated to them by charities, or budgets that have been donated to them by governments. Now, customer and market measures. Well, an effective customer satisfaction measurement system indicates the relationship between customer satisfaction and the customer's likely future buying behavior. So customer satisfaction measurements, if they're accurately done, perhaps by survey or by telephone survey, or perhaps by the marketing department meeting with the customers and asking their opinions, or forming focus groups and inviting people to attend focus groups perhaps in local hotels, and finding out what they feel about the product and that sort of thing. If the customer satisfaction measurement system indicates something quite positive about the product, will that be reflected in future orders for the business? So it's trying to get a match between what the customers think or are saying about the product and their behavior. Now, how effective is the measurement system at judging what the customers are saying against likely future orders? In other words, is the measurement system efficient? Is it picking up the right information? Is it going about the assessment appropriately? Measured in three areas, generally speaking, customer satisfaction, measured in terms of quality, in terms of service quality as well, and in terms of response time. So the quality of the good is very important in terms of customer satisfaction, as is the service quality, after sales service and contact with the customer when the product is purchased, dealing out any issues or any problems, and the response time whenever contact is made with the customer, or the customer makes contact with the organization. What's the response time? How long does it take the business to get back to them and deal with any issues? So there are three possible areas that link to customer satisfaction measurement. Other customer focused measures include customer complaints, loyalty, customer retention, warranty claims, service guarantee claims, and service upsets or failures. So it's, generally speaking, it's talking to the customers when they contact the organization, talking to them about the product, about their experience, about what's gone wrong, and trying to deal with that. And feeding back that issue to management within the business so that corrective action can be taken in the context of future production. That issue doesn't arise again. So it's feeding back information to the organization, but it's dealing with the customer as well, and it's collecting the impact of the failure or the issue on the reputation of the business. It's looking at customer satisfaction and looking at that as a measurement, trying to gauge the impact of some failure or some issue that's caused the customer to contact the organization. It's measuring that impact on likely future sales. So it's looking at customer satisfaction measurement. Safety, as I said, is probably best done by taking in experts from the outside and doing regular reports on safety issues. So experts from the outside, so it's more objective, and also it's a routine task. But it can be done internally. Measuring safety is vital to all organizations, as the well-being of its employees and customers should be the organization's principal concern. As I said earlier, people don't go to work to get hurt. They go to work to earn a living and to participate in some useful activity, because that's what we do as humans. And it's important that the environment within which we engage in these activities is safe. So performance measures could include accident rates, parts per million of arsenic in public water supply, for example, or the security in a hotel room, fire prevention measures in hotels. It can cut across many areas. But trying to work out the safety and try to prevent disaster or prevent accidents should be the first priority of the business. People are going to a set place of work. They need to have some confidence that they're safe in that activity. They're not taking risks with their lives or with their bodies. They're not going to be hurt as a consequence of the activities that the business expects of them. So probably the best way to do it is having regular reports and regular assessments, and perhaps even spot checks to ensure compliance to certain recommendations. For example, people wearing safety equipment and safety clothing during operations, that sort of thing. So in this session we've looked at performance indicators and looked at the complexity of performance indicators and why some performance indicators, whilst desirable, simply cannot be properly evaluated and properly constructed. But it's important to be aware of them. So this is what the session is doing and what the session is set out to do. But that's all I'm going to deal with here, so I'm going to leave it at that and say thank you for watching.